This conference will now be recorded.
Hello guys, welcome back again. So now here in this season I'm going to cover a topic called down payment. Guys, we are still in account payable. So if I talk about down payment, it means I'm going to explain this vendor down payment. You guys are going to learn vendor down payment. So now how to configure this down payment and the testing part, each and everything is going to be discussed one by one in details. See, if you talk about the down payment, guys, the concept is pretty simple. Look at here, down payment means advance paid to vendor. These advance may be paid to the vendor for the purchase of goods from vendors or else like taking services from vendor. So down payment is nothing but advance payment. Even as an individual also, let's suppose if you're going to order something, if you're going to buy something, so let's suppose from a particular person, what will happen, like they will say that you just give some advance, so that like 30% or 20% of entire amount you have to pay in advance, and once we are going to send you the whatever the product is there, then you can make payment. Whatever the remaining payment is there, that you can pay on final delivery. So delivery of the product. The same concept is applicable here in terms of organizations. Like Tata Motor is an organization. Whichever vendors are there, that is also an organization, right? So if organization to organizations procurement is happening, that is going to happen on credit basis. That is already explained in account payable introduction part, right? So here, say for example, there are certain vendors which is pretty new, like Tata Motor is entered with the agreement with, in the agreement with few vendors, and they are pretty new. Like, so here, there might be in some cases vendors are going to put some conditions like, okay, whatever orders are going to be placed by Tata Motor, in the sense, whatever the orders are going to be placed by you people, so vendor is going to, in the sense Tata Motor, whatever the orders are going to be placed by Tata Motor, vendor will charge some 30% or 20% or 40% down payment first, and remaining amounts are going to be paid as per the terms of payment which is agreed between vendor and Tata Motor, this is supplier and Tata Motor. Now, so down payment means nothing but advance payment. Let's suppose Tata Motor is going to order a particular raw material in like whatever quantity, tons or liter, or whatever it is, like units, right? So say for example 1,000 units of what to say goods has been entered, order placed by Tata Motor for 1,000 units. So now the total price will be, let's suppose, $1,000 or 1,000 rupees, or whatever your currency, 1,000. One, like 1 rupees each, what to say, unit of product. Okay, I'm just quoting a least amount only. No, generally in real time, what will happen? It is going to be in millions and all. But anyway, just for example, so here 1,000 rupees will be for 1,000 units. So vendor is saying that as per agreement, like 30% advance supposed to be. So we have to make payment of this 30% advance. Now, so why there is a need of separate configurations, guys, for vendor down payment? So of course there will be a need of separate configurations of down payment. Why? Because let's suppose if you talk about document type, what is the use of document type, guys? Hope you guys are able to remember. If not, watch the previous video, that is document type separate video I have recorded. Document type is going to determine the types of transactions. Okay, as I told you, let's suppose this is this much worth of invoice, and then credit memo worth of 300, and final payment we have made worth of 700. Credit memo means purchase return, right? Purchase return means whatever we have purchased from vendor, out of 1,000 rupees, 300 worth of goods, let's suppose, we are going to return to the vendor. Now, so if this is the case, so here the question is how you will come to know which one is the invoices, which one is credit memo, and which one is the payment. So the answer is pretty simple, with the help of document type. With the help of document type determines the types of transactions. So whenever you are going to post transactions, the transactions are getting posted against different document type. Invoice is going to be posted against KR document type. credit memo is going to be posted against KZ document type, and payment is going to be posted against KZ document type. Now this is a normal payment, right? Whereas what about the down payment? So again, if you are going to make a down payment, okay, let's suppose we have made a 250, we have made a down payment, okay, this is down payment, in this is advance payment. So here what is the final payment, guys? Or is like, let's suppose 200 I have made a down payment, so here 500 only will be the final payment, guys, because 200 down payment is there. 200 down payment is there, 1000 worth of invoice we have received, out of which 300 worth of goods we have already returned, so 700 rupees out of 700, 200 already we have made in the form of down payment, so 500 is going to be. Now here, so down payment is also going to be posted against KZ document type itself. Now how you are going to differentiate which one is the down payment and which one is the normal payment? This is what the question, right? So that is what I'm saying, guys. There is a separate configurations for this one. Very small configuration is there, guys, but try to understand the logic behind this. Here also there is a need of creation of reconciliation account. Now there is a question. What is the question? That also I'll explain. Okay, what could be asked by people during interview. So here, if you talk about down payment configuration part, guys, first of all, I'll show you the configuration part. I'll explain the logic and then we'll perform testing as well. Okay. Now you just look at here, the configuration part. Okay. So we have to create a down payment reconciliation account. That is the first thing. Now you should know why to set up down payment reconciliation account. What is the need of down payment reconciliation account, right? I'll tell you. Let me do one thing, guys. I'll just cut and I'll paste it here. Sorry, I need to cut it and I'll paste it here. Okay, now let's suppose earlier we have already like account payable basic setting. I have already covered in the previous lecture, guys, right? So in account payable basic settings, what is there? In account payable basic setting also, guys, we have done certain configurations. Certain configurations means you have created vendor account group, right? We have set up number range. You have assigned this number range against your account group, vendor account group, right? We have created a reconciliation account. Now, so a reconciliation account is created earlier also. And for down payment also a separate reconciliation account is going to be created. So the question is why there is a need of creation of again separate reconciliation account whereas the reconciliation account is already created, right? This is what you need to understand. I'll just explain in a simplest way so that you guys will be having perfect understanding. Let's suppose, so once again, now here I'm having multiple vendor. Okay. Then here invoices also posted against this vendor. Okay. Now, so and here now, so here let's suppose vendor A, B, C, D, E, F, G, H. These are the vendors. Okay. And here against every vendor certain open items are there. It means we have posted multiple invoices. I'm going to keep all the amounts in round figure, guys, so that the calculation will be easy. Now, so here what is happening? This is the case. These all vendors are there. These many worth of invoices. What is the need of reconciliation account, guys? I told you in the previous lesson. Once again, I'm going to repeat. If somebody asks, what is the total payable? Okay, I'll type in shortcut total payable. What is the total payable? Right. So now total payable, we are going to make sum of these all amount. So this is what is our total payable, guys. It is 49K. Okay, 49K is our total payable. Okay, so now here in SAP, if we have to calculate the same amount in SAP, why? Because if the financial statement is going to be published, guys, in financial statement you will be having like combination of P&L statement, profit and loss statement, and balance sheet, right? So in financial statement we have to show our total assets and total liability, because the financial statement shows like the financial health of a particular organization, right? Based on that itself, whoever the investors are there or whoever the stakeholders are there, they will come to know like uh, how healthy this company is financially. I'm talking about like how uh, about the performance of a particular company, whether it is in profit or whether it is in loss. In future, what could be the future of this company? Whoever the stockholders are there, whoever the new investors are there, they will do multiple analysis and all, and then they will come to know, okay, this company is safe for the investment and all, right? So financial statement is going to be published. In financial statement, you have to publish your liability, assets, everything, profit, loss, whatever it is, revenue and expenses, everything is going to be the simplest way I'm explaining, guys, because I just assume like most of you are not from finance and account background. Even there are multiple people who is from finance and account background also. But if I talk about the knowledge, almost zero knowledge is there. Because even in my classes also, I'm having people who has done like MCom, BCom, or like from other like even from other countries also. From other countries also, people are there who has done this accounting courses and all. But if I talk about a simple accounting entries, the logic is zero. They passed out the course, they have done their bachelor's, they have done their masters and all. That is 2 years back, 3 years back, and they've forgotten all this concepts, whatever is there, right? So that's what I'm talking. That those who doesn't know about this accounting and all, their knowledge almost is zero, right? And those who has done this accounting, like they're having like bachelor degree or master degree in accounting, even sometimes their knowledge is also very basic or below than this basics and all, right? So if you want to improve your accounting knowledge, there is multiple what to say YouTube videos are there, guys, or else in future I'll try to record a separate tutorial for this one, at least for basic accounting, guys. Okay, it based upon your comment. If anybody is required for that, you guys just put your comments and all. So I'll try to record a basic accounting, in the simplest way, so that like you guys can learn this basic accounting, and this is going to be more than enough for this SAP Finance course. Now, so anyway, I'm talking about what, guys? Total payable. Total payable is 49K. How? Because sum of these all amounts, right? But the same calculations here manually, it means like what is happening here? We have calculated this amount manually. Now, automatic calculation is required. In SAP, you are not having time to visit each and every vendors and then checking each and every amounts individually. Or else, like if 10,000 vendors are there, then it's going to take 2 months, 3 months, or might be 1 month to get all the details, right? This much is the balance in this vendor, this is the total payable for this vendor, this is the total payable for this vendor. One by one, if started consolidating this all figure one by one, it's going to take too much time, right? So now we are having, SAP has given one more thing saying that while creation of a vendor account, you need to assign a ZL account in the vendor master. So look at here, guys. Now what is happening? At the time of creation of vendor account, in reconciliation field, what is happening? In reconciliation account, we are going to give the ZL account, right? We are going to give, there was a candidate, one of my students, he went for interview, and the pretty simple question was there, what do you mean by reconciliation account? So I'll tell you guys, reconciliation account is nothing but a ZL account only, which we have mapped over there, in the sense which you have given at the time of creation of vendor. What is the logic behind that? So the logic behind that, let's suppose we are having 1,000 vendors. Against every vendor, certain open items are there. In the sense like open item means payables are there. So if we have to calculate the total payable, what is happening? Whatever the payables are getting, let's suppose whatever invoices are getting posted against a particular vendor, the same amount is going to be posted against this real account also. I'll show you itself in this session itself. Don't worry, so that you'll be having, you guys will be having, confidence and all. So now here, So whatever this payable we have posted, invoice we have posted for A, it got updated against A. At the same time, it got updated against this GL also. In the same way, this amount against this window and against this GL account also. So instead of consolidating this figure, by this, in order to get your total payable, instead of checking vendor balances one by one, we are going to check this GL balance itself, and here itself you will be getting the consolidated figure. So now if somebody asks like what is the total payable as of now, so it's quite simple. We are going to check this GL balance and you guys will come to know that 49K is our total payable. So that is the logic. That is the logic behind reconciliation account, guys. A GL account is going to be created and that will be assigned against every vendor. The same GL account is going to be assigned against every vendor, right? There is a few more concepts. One more concepts. Like let's suppose that there might be chances where the people will ask like, is it possible to set up multiple reconciliation account? Yes, it is possible. Again, that is a different concept, guys. Again, like later I'll set up a different tutorial for this account payable, that in details, where I'll explain these all things. Right now it's going to create lots of confusion. So first of all, you try to understand this basics and all, so that you guys will be having later on, if I'm going to add any scenario also, you guys will be having a perfect understanding of those things. Now, so here we are talking about this GL account which is created, and that GL account is called reconciliation account. This reconciliation account GL is going to be assigned against your vendor master. And what is the logic behind creation of this GL account, guys? To get the consolidated figure of total payable. In the sense, to calculate the total payable, we are going to see the reconciliation account balance itself. In the sense, this reconciliation GL balance itself we are going to see, and based on that we can come to know that this is what the total payable is. So now recon account, this reconciliation account is going to be assigned against your vendor master, right? Now I said down payment, so let's suppose here down payment also will be there, right? So this down payment will be like, say for example, against this 5,000 I've given a down payment worth of 2,000. Here again 1,000. Okay, against this one there is no down payment. Here some down payment is there, right? Here again 2,500 is there, right? So like certain against, it's not like that against every item. Let's suppose against certain invoices we have made the down payment and all, right? So even the total down payment also we have to calculate. The total down payment calculation is also required. Why? Because if somebody asks what is the total payable, so do you think that whatever this 49K I have calculated is our total payable? No, this is not the total payable, because this is what the total payable which is showing in your this one system. At the same time, there are multiple invoices against which we have made already down payment, in the sense advance payment we have made, right? So out of 49K, this 12K already we have made. The payment is already made of 12K in the form of advance payment. So this 49K minus 12K, right? So 39 and 37K generally will be the total payable if we have to calculate. So this is your liability and this is our assets. This is your assets, right? This is going to be part of your liability. This is going to appear under liability side. This is the part of down payment. Vendor down payment is your assets, right? So total payable means this much minus this much. So this is what the total payable. It means we are liable to pay 37K only, because out of 49K, 12K is already paid, right? Now, so here what is happening, guys? Even so, this down payment, if like somebody, if we have to calculate what is the total payable, we are going to take this GL balance 2,000. So we will come to know this is the total payable right now. And if you have to calculate down payment, is also going to be that is also going to be specified in balance sheet separately, guys. So down payment, whatever the vendor down payment is there, is going to be separately, it is going to be updated. So if you have to calculate the total down payment, guys, how it is going to be calculated? So it is possible only if the down payment is going to be updated against a different GL. If down payment is going to be updated against different GL, let's suppose we have created a GL code 1005. So now this is like a down payment taken account. Okay, down payment taken account. So when the normal invoice is going to be posted, guys, the normal invoices are going to be posted against these all vendors. Down payments are also going to be posted against vendor itself. But in background, the invoices are going to be updated against this reconciliation account, whereas the down payment is going to be recorded against a different reconciliation account. In the sense, invoices are going to be recorded under this GL account, and down payments are going to be recorded against this GL account. This is how separately. So if you check this GL balance, you came to know that 49K is our total account payable. Okay, that is going to be part of liability. And if you're going to check this GL balance, then you will come to know that 12K is our total down payment which we have made to the vendor. So this is going to be part of, this is going to be published under asset side. Okay. Now, so it means if you have to calculate, forget about the financial statement, guys, that is again is going to be discussed about, in details later in upcoming sessions. Right now, here itself, if you have to calculate what is our total payable, so total payable is going to be updated against this reconciliation account 49K. And if you have to calculate what is that, out of which how much down payment we have made, then a different reconciliation account we have to create, and this down payment is going to be updated against. So down payment is going to be updated against this GL account. So overall balance here total 12K and here 49K. 49K minus 12K, 37K. Easily we can come to know this is what our down payment, right? So this is why you need to set up, because down payment also you need to know. You have to like see, you have to calculate down payment also separately. Let's suppose there is a requirement, if you want to see the report how much down payment we have made till now. There is how you can come to know. A different GL account supposed to be created. Now the question is, again the question is, and there is a problem also. And this is what is going to be asked by people also during interview. It is already asked earlier, like several times people have asked these questions, that okay, let's suppose down payment, we have created a reconciliation account for vendor, right? And we have created a reconciliation account for customer, sorry, down payment also, right? So two reconciliation accounts are there, whereas in vendor master, we are going to assign only one reconciliation account. Because if you talk about vendor master, guys, in vendor master you can assign only one reconciliation account. So what about the second reconciliation account which we have created for down payment? So guys, this reconciliation account is not going to be updated in vendor master. This is going to be updated somewhere. Where it is going to be updated, that I'll show you. So look at here. This was the concept. First of all, hope you understood. Now I'll come back on this configuration part. So now we are going to link the down payment reconciliation account with vendor reconciliation account somewhere, not in vendor master, because in vendor master, if you go to, let's suppose XK02 itself, I'm going to use here. Okay, I think it's gone. I'll have to log it once again. Now here, go to XK02 and check out the vendor number. I think this is the vendor number 3 0 and here accounting info, press enter. So look at here reconciliation account. Here you can assign only one GL account. There is no scope of assigning any other GL account, guys. You cannot give comma and you cannot give other GL account. Only one GL account can be assigned in reconciliation account. So what about the next one? So the next one, link down payment reconciliation account with vendor reconciliation account. It means whatever the newly created reconciliation account is there, this one down payment reconciliation account, that is going to be linked with this vendor reconciliation account. Again, the next question is, okay, in vendor master, we have given this main reconciliation account payable reconciliation account. And against this reconciliation account, somewhere we are going to link this down payment reconciliation account. So the question is, at the time of invoice posting, how system is going to trigger this reconciliation account? At the time of down payment posting, how system is going to trigger this reconciliation account? How system will come to know that this is a down payment and this is an invoice? This is what the question is, right? So I'll explain these things also, guys. Multiple video tutorials are there on down payment where everybody's are going to explain the configuration part, guys, right? If you have to, like, if you're learning any topic, guys, this is how you need to have understanding and all. From a single topic, multiple questions can be derived in a different way, right? Now, so I'll show you guys how it is going to happen. Now, so first of all, what I have to do, let me do the configurations. Okay, configurations means let me set up this down payment reconciliation account, and then I have to link this, linking in the sense configuration part. And in next session, what is happening, guys, I'm going to explain these things in details. The testing is going to be performed only once the configuration is done. So let me configure these things, and once I perform the testing, then I'm going to answer this question whichever I have asked just now. Okay, how system is going to trigger account payable reconciliation account. It means normal reconciliation account during invoice posting, and how system is going to trigger down payment reconciliation account during down payment posting. How system is going to recognize or differentiate both reconciliation account, right? We'll explain you. Let me do one thing, guys. Let me configure first of all. Go to FS00 and you have to set up down payment reconciliation account. So down payment reconciliation account supposed to be created under asset account group. Okay, now here let's suppose 1001, press enter, and here you can like vendor down payment, and here you can give, you can select, guys, reconciliation account means here you can select vendor. Okay, nothing else, remove this check mark, and here I'm going to assign a different reconciliation account, guys, 067. For whatever reconciliation accounts are there, guys, for the reconciliation account you have to assign this field status group only. What is the use of field status group, guys? Field status group controls the fields which appear during transaction posting. It is already explained in the previous session. Hope you guys are able to remember. If not, then you can watch that video. Okay, save it. So I have created a reconciliation account for vendor down payment. What next, guys? The next one is we are going to assign, we are going to link this down payment reconciliation account with vendor reconciliation account. But guys, now here, if you talk about, I told you like normal payment is going to be posted against KZ document type. Even down payment is also going to be posted against KZ document type itself. KZ document type, normal payment. And down payment also is going to be posted against KZ document type itself. Down payment is also going to be posted against KZ document type. So how you will be able to know how you are going to differentiate this down payment and normal payment, guys? So down payment is also going to be posted against document type KZ will be there, guys, but it is going to be posted against a special GL indicator called A. Okay, this special GL indicator, there is a crucial role of this special GL indicator, guys, that I'll let you know. This is how system will be able to differentiate these two reconciliation account. Don't be confused, guys. I'm going to show you practically so that you'll be having perfect idea. Okay, Now, so right now what we have to do, right now, look at here, link the down payment reconciliation account with vendor reconciliation account. OBYR is the transaction code. And what is your down payment reconciliation account, guys? 1001. Keep in your mind. And then go to OBYR. And here, look at here, special indicator A, right? Down payment is there. So you double click on this and give your chart of account and press enter. So against this special indicator A, and key means this is account type. For vendor, the account type will be K. For customer, it is D. For GL, it is S. For asset, it is A. And for material, it is M. Account type, these are the account type. Account type is also having certain control, guys. This is like, if you see the document, type, you guys will come to know, or else there'll be a topic if vendor is also a customer. There I'll try to explain these things. Okay, there'll be certain control. Once I'm going to explain that topic, you guys will be having understanding. So that's what I'm saying, guys. Look at here, each and everything is having dependencies or like relevant to each other, right? There are certain things which is going to be, which is already explained in previous session. There are certain things which is going to be explained in upcoming sessions. Now, reconciliation account and special GL indicator account. So what is our reconciliation account, guys? 2000. Special GL account is 1001, which I have created, right? And save it. So now I have assigned this special GL, this special GL account means down payment reconciliation account I'm talking about. So down payment reconciliation account is assigned against account payable. Account payable means normal reconciliation account which is there in the vendor master. Save it once. Now what to do? The next thing is testing part. So once I do the testing, guys, then only you guys will be able to understand, like, okay, when system is going to trigger this one and when system is going to trigger this one. So in next session I'm going to explain this end user part, in the sense testing part.